Okay, let's dive right in. We're looking at the analysis of CoreWeave's Q3 financials and its stock.
Specifically, that dramatic V-shaped recovery on November 21st, the 3.5% pop.
Exactly. So let's get straight to how we can make this analysis even sharper.
Sounds good.
All right, first big opportunity. The narrative needs to do a much better job of reconciling the company's, its hypergrowth with the fact that also posted a net income loss.
Right, you've got this incredible Q3 revenue, $1.36 billion, up 133%.
And $1 billion in gross profit, which is amazing. But the piece it focuses on the stock fighting back and just glosses over the minus $110 million net loss.
And the negative cash flow. It really simplifies a complex investment challenge, doesn't it?
It does. So our suggestion here is to actually lean into that negative number.
Don't hide it, feature it.
Exactly. Explicitly frame that net loss as a strategic investment cost. It's a direct result of that huge CapEx on the Nvidia H100s and Blackwell chips.
So you turn the apparent negative into a bullish indicator.
Precisely. And for a concrete example, you use the positive EBITDA number, that's $682 million, to prove the point.
You explain how the market is clearly valuing that operational success over a temporary accounting loss.
It's growth spending, pure and simple.
Which leads us, I think, very naturally to the second point.
It does. To really maximize the impact of this turnaround story, the analysis has to directly address the specific bearish headwinds you mentioned.
You list them out. The AI bubble fears, the Nvidia hangover, but the really potent one?
The insider selling, the CFO and General Counsel, that is a huge red flag for any investor.
A massive one. And the piece just lists it. It doesn't actively refute it or connect it to why the recovery even happened.
Yes, it leaves a huge question unanswered. So the suggestion is to strengthen the argument for why that $65 support level, the golden zone, held up.
You can't just say buyers ignored it. You have to theorize how sophisticated value buyers looked at that news and discounted it.
Right, and you can do that by showing how that overwhelming signal of 133% revenue growth just completely outweighed the temporary negative sentiment.
The fundamental business metric was just too strong to ignore.
It made that sharp intraday drop look like a classic overreaction, which was ripe for a reversal.
An opportunity. Yeah.
It's fascinating how the market pivoted that day, but that brings up the structure.
You mean the leap?
The leap. The analysis jumps from the immediate tactical V-shaped recovery straight to this massive strategic implied upside.
It's a bit jarring. There's no bridge connecting that intraday defense of a stock price to the long-term target of $130.
Right. The material moves from the 10:30 a.m. freefall and the 12 p.m. flip straight to a Wall Street average that implies an 81% upside. The reader is left wondering how we got there.
So the suggestion is to structure that discussion to move more logically. Go from the short-term price defense and then to the next key long-term catalysts.
Yes, and you can even use the different analyst targets to create some narrative tension.
Okay, so a concrete example?
Highlight the next earnings report in February 2026 as the key catalyst. Link the current volatility directly to that future event.
So you could bring up the JPMorgan downgrade to neutral at $110, which was based on supply delays.
Exactly. And you argue that this strong balance at $65 shows the market is already betting that those supply issues will be resolved by the time that February report drops. It connects the dots.
It builds a case instead of just stating a target. I like that.
So to summarize, the three key opportunities are pretty clear.
First, you have to fully integrate that net loss into the hyper-growth narrative. Make it a strength.
Second, actively refute those specific bearish factors, especially the insider selling, by using the core business metrics.
And last, build that clearer structural link from the intraday bounce to the long-term $130 price target.
Make those changes, and we strongly encourage you to submit your revised analysis for another look.
We'd love to see it.